Well, the Canadian dollar has been weak lately, and we know why. The Bank of Canada has cut interest rates now 4 times, including a 50 basis cut most recently. Let's talk to an expert about it. He expects the period of weakness for the Canadian dollar to last for a longer period of time. Adam Buitton is Chief Currency Analyst at ForexLive. Adam, thanks a lot for joining us. We're now at the lowest level in the Canadian dollar versus the U.S. dollar since May of 2020. You make the point of, however, that accepting a period during the COVID crisis and the oil price collapse of 2016, if you set those periods aside, we're getting close to the lowest level in the Canadian dollar in about 21 years. Why don't you take it from there?
Yeah, I mean, it's been a tough period for the Canadian dollar, and if you back it out, I mean, the things that have been driving the Canadian dollar have been resource extraction, housing, and population growth. And I don't think Canada's doing very well on any of those fronts right now. At the same time, there's some U.S. dollar strength that's bumping it up as well. And, you see bond yields creeping up in the U.S. because this recession that was supposed to hit the U.S. just isn't coming to fruition at all. So you have strength in the U.S. and Canada weakening, a lot of political uncertainty here as well, weighing on the loonie. And it's all added up into a pretty tough time. You mentioned earlier the Chinese stimulus today as well. That could be some good news for Canada. But looking at the details of it, it's to raise some money for local government bonds, which starts to raise more questions about this local government debt in China than it answers, and it's spread out over 3 years. So we're seeing some disappointment in Chinese markets, and again, that was one of the factors that could really save the Canadian dollar here, and it looks like it might not work out.
So all of this culminates, all of this is reflected, I assume, in the Canadian economy and the Bank of Canada acting to stimulate the Canadian economy by cutting rates, you believe, more aggressively than the Fed over the next year. Is that correct?
Yeah, absolutely. I think the Bank of Canada is way behind the curve here. I think we're still at 3.75% in rates in Canada. And, we just shouldn't be here. This is not an inflationary economy anymore. I don't think central bankers have quite got that COVID was really a one-off, that nothing's changed about the neutral rate. Nothing has changed in the economy, except we have AI coming, which is even more deflationary. So they need to get rates down to about 2% in short order, but obviously they're not going to do that. They'll stretch it out, which will prolong the suffering, worsen the housing downturn, and really just take out all the possibility of any kind of strong growth for the Canadian dollar as far as I can see.
Hi, Adam. It's Paul Harris here. I was just wondering, how do you think about Canada's fiscal situation, and how does that play into the currency over the next, sort of year or 2 years, given our kind of difficult fiscal situation that we're in?
Well, it's an interesting case when you compare it to the U.S. dollar, right? In the U.S., they're running deficits around 7% of GDP. In Canada, it's about 2 or 3%. So there is some room in Canada to stimulate, and I assume that when we get a change of government, there will be some deficit running measures, whether that's tax cuts or something else, although that may be offset by maybe cutting in federal spending. So I don't see a lot of pressure on the Canadian dollar coming on the fiscal side. It could be a short-term tailwind. I worry more about the U.S. side and how we come out of the election and how they may lower spending coming out of that, depending on the composition of Congress. But for politics in Canada, what I'm really thinking about right now is this promise not to tax GST on new home builds, right? So if you're a home buyer in Canada thinking about buying a new home right now, it would seem absurd to me to actually complete that purchase when you can wait until there's a new government and now you're getting a 5% discount. So now I think you might have backed out housing even more and delayed some of those purchases and put even more downward pressure on housing, which is going to slow that building pipeline.
So, Adam, the other thing I want to ask is that, I think there's always been a lot of these issues about talking about the U.S. dollar losing its status as a reserve currency, and the world is bifurcating between kind of, China, Russia, that sort of thing. What's your view on sort of that? And I mean, when you think about the U.S. dollar from a bigger picture?
Well, it's interesting on the gold front, right? We had this BRICS summit this week. It got people very excited about, Russia, China. There is a real impetus there to get away from U.S. dollar hegemony, right? And they appear to be diversifying into gold, and gold is working really well. However, there's really a cult industry around sort of de-dollarization, the collapse of the U.S. dollar, the collapse of U.S. government debt that gets way more airplay than it deserves. And I don't see it as an investable theme outside of precious metals. And it's really not something that turns the screws on the U.S. dollar in any sort of near-term time frame that makes me worry about it losing its status. But, those things are in motion. It's just a matter of probably a multi-decade timeline.
Let's finish. You mentioned the U.S. election briefly. Let's finish there. Your view is, and I think the view of a lot of people, is that if Donald Trump wins, the Canada-U.S. free trade agreement gets torn up again, needs to be renegotiated again. Tariff barriers go up, possibly around the world in response to higher U.S. Tariffs. That would be Canadian dollar negative. Why don't we focus instead on the other scenario, Kamala Harris? We know, I think, a little less about certainly her views on relations with Canada. I don't think she's sketched out much of anything at all, but her views on trade, I think, as well, are less well known. What do you think a Kamala Harris victory means to Canada and the Canadian dollar?
Well, I think you have to be a lot more hopeful for the trade situation with her as president. I mean, she likes to downplay it, but she spent her formative years in Montreal, and hopefully she would have a soft spot for Canada and not be looking for a fight. So I think on the face of it, you have that, and then on the policies, I think you would just have a status quo policy. So you're hoping for the status quo and not something worse, which doesn't exactly inspire confidence in the Canadian dollar or the Canadian economy. But then you have to look at the permutations around Congress and how it's divided. The chance of a Democratic sweep is infinitesimal. And so there isn't really some sort of playbook there where you would have a lot of stimulus. And then if you have a Kamala Harris presidency with a Republican Senate, you end up in some sort of gridlock situation where the fiscal hawks probably take over, and that puts downward pressure on U.S. growth, and that would spill over into Canada as well. So there's not exactly a rosy scenario coming out of this. No matter which way it shakes down.
Okay, I should ask you, Adam, do you have a target on the loonie expressed in U.S. cents for the next 6 months or a year?
Yeah, I mean, I think we do get down to 6 months or a year. We're probably going to get down to 70 cents, and then in the long term, probably 68. I really think, if you look at the growth in the last 20 years in Canada, it's been housing, immigration, resource extraction. None of those are working right now. Housing is in a bad spot. Immigration is going in reverse. And it's never been harder to get resources out of this country. And I just don't think there's a recipe or a vision right now in Canada for where the growth is coming from.
Adam, thanks a great deal for your insight. Adam Buitton, Chief Currency Strategist at ForexLive.